Hi everybody, Shane Carlisle here at L&I Trade House. So this is the intro video everyone's going to walk into. Just a basic breakdown of everything. First video that you're going to come into, this is the first one that you're going to see. It's going to be pinned at the top of the beginner section. I'll get this pinned right at the very top. It's going to be a nice breakdown of what we do and how we do it. So smart money concepts with price action. We follow what's happening with the price and we make risk managed trades on the difference of the market. Okay. So what that means is we have higher probability chance of our trades working because we have 6 or 7 confirmations that we have before we get into a trade. But for simple breakdown terms, okay, I thought I'd pick this sort of area because so what we do, we work off a break of market structure, which has happened there, but an accumulation. I won't go into all the wicks and stuff on this. This is just to show you what happens. We've had an accumulation. As it's come back down, you're still bearish because the market's bearish. So you're still looking to sell off. And the smart money concept, the first thing you look for is a break of structure, which has happened in that candle. It's broke the previous candle and closed below it. Okay, and then next confirmation, we've got a banker's candle, and that's engulfed. So that's another confirmation. There's 3 confirmations already. You've got market structure broke, sellers outweighing the buyers, engulfing that candle. So you've got an engulfing banker's move that broke the market. Okay, so you wouldn't see any of this. None of this would be here because this is what's happening now if you was doing it. Okay, so we'd set a line on that position. It's come down, it's closed. Okay, so now the trade's good. We can put another confirmation on. You can put a tool, which I'll show you to set up, that shows you, because we know the banks like to trade at a discount. What bank wouldn't like to trade at a discount? Who doesn't like to trade at a discount? Everybody likes getting a discount. Okay, and through years of testing and stuff, the 70, I think it's 71 and 86 the bankers use, the bankers strategy, but I like to keep it 50. So I did have 50 and 75, but the 86 works really well. So that's another confirmation. So we've had a break of structure, we've had an engulfing setup that broke the market, and that is a valid banker's candle now because it's broke the market. So you'd come along, we'd set a position up on that candle, we'd cover the very high to be safe. This is the 4-hour, don't forget, so this would be a very long trade. You'd take your previous lows as your target. Okay, so you've had 1 confirmation, 2 confirmation, 3 confirmation, 4 confirmation. There's imbalance under the market there, 5 confirmation. So you've laid 5 confirmations before you've even put that position on. Then they came back, retested the lows, came back to retest the candle once more, and then went and give you your position. So 5 things told me that, okay, you've got a probability of getting a trade out of this. We've had the accumulation, they've took everybody out, and then they broke the market. They did it again here. They broke the market, they came back to the candle that broke the market, and they dropped the market. Okay, so smart money concepts is about, you're basically waiting for the algorithm to break. Okay, so that one worked out an absolute beauty, and that actually went for the rest of the afternoon. If you'd have covered, even if you were just covering your 86, that went previous lows for 14%. Now I don't know what happened this side. Did it carry on? Yeah, see? No, from finding that one entry as it's pulled back but stayed bearish, You know, you took 25% out of the market. Now banks give you a 0.1 return on your money. Okay, so just take that into consideration when you're looking at what we do, right? Because we trade alongside the banks are making more than that, but we're just having little crumbs on the way out. We know that they do these patterns, we know that they break the market and that they have to retrace it back. It's just being patient enough to wait for them to come back. Okay. So smart money concepts with price action. You've just seen we've gone previous lows, 25% from that. Okay. It's a decisional area, but I won't go into all that because you're in the middle of a price lag and stuff like that. But again, it's a beginning video that just gets you, piques your interest. Okay. So now this is all a bit noisy, but I'll run you through what I've done here. Okay. I'll mark these up for the boys in the Discord. So I see a bullish breakout happening because we've come down and hit a major price line from over here. And then it's, I call that the inducement sweep because it's came up and then sweep the previous selling power out of the market. Now the buyers are in control. It came down. You know, if you was hot on the case when you'd seen that and set up on that candle there, covered your bottom, gone to your previous highs, you know, you're 6% there from seeing that break in the market. The algorithm broke, the algorithm corrected itself, and away you went. So now, to me, it's creating higher high, lower, higher low, higher high, higher low. Then it's come back to clear out all these equals here that they didn't take here. Everyone would have forgot about these, but the bankers don't. You know, we know they've got to come there. They mitigated, took off, took the inducement again, but they broke the market structure previously. Okay, so now they've broke the market structure, they've swept the inducement, they're still within this higher high and this lower low. So this is still one leg. You know, you've got a very, very strong sell side here. See, wick there, with a bank move here. And there's an extreme bank move here that engulfed the market. Okay. That was the last sell that created the buy ripple. So that's your banker's candle because it's the last down before the up move that broke the market. Okay, same with this. That's your bank move because it was the last up before the down move that broke the market. You know, because we're only looking to buy, I wouldn't be looking to sell off. Didn't quite reach the price line, you know, but again, you're adding another. If you start trying to sell off when the market's buying, you're going against what everything that the market's doing. So you're going to come at a loss more than you are a win. You may as well have another confirmation with the trend going the right way. Okay. But not to blag and confuse you too much, but always trade with a trend when you're beginning. Yes, there's opportunities to take stuff on the way back down on the corrections, but that's when you get comfortable seeing, you know, you have a smart money trap there. Everyone thinks that's where it's going to carry on, but they broke it because they were bearish from here, bullish from here, sorry. You know, but smart money concept all works off from the main thing that has to happen is a break of market structure for then to have a correction where we're sat to then move up. Okay. So I thought that would just be a nice little breakdown. Obviously, I showed you that trade there that happened after the take back. We were still bearish. It came back, released its orders, spent the day going down, finished at 25%. Again, here you go. Break of market structure. You've got your banker's candle at the top here. Last up before the down that broke the market. It gave you your previous lows. Yeah, cover your top, your previous lows. Now that went for 20%. just from coming to the computer at a time where a market breaks. It can be in any time frame. They all happen over all time frames. Yeah, so it's keeping an eye for a break of market structure. Once you've had a break of market structure, then you can start laying other things, like your banker's candle becomes active. You can put your Fibonacci on, put the trend on, start laying them confirmations that clear your brain to say, yes, that is a position where I'd like to sit, win or lose. But the probabilities of the market of being broken to then have a correction back is higher than me looking to try and buy up with it. Because you've had such a big rejection. What I've seen, the bigger the rejection, the bigger the profit, because they have to come back to that corrected area. So when it does happen and breaks away, you want them to push away as far as possible, because then that gives you more profit because you're picking your lows. But you have to be in extreme price levels when it happens. You've got to be, you see, we're in the 4 hour here. It's not been up here. We're back in 2020 now. So it's not been up here for 2 years. 3 years. There you go. Last time it was up here. We'll have to go a bit higher. It's the monthly saying. Oh, wow. And that's why I'm looking for the bullish breakout, because we've never been this low. Ever. We've had the sweep up, the break. That candle broke the market. It's rejected off its area here. That sweeped everybody as it came down. That sweeped everybody on the way up. Looking for a touch off here and a bullish market for a little bit. Again here, this is in the monthly. So if you saw that 2008 March 3rd, they broke. They came back to there, the last up pressure before the down, dropped the market for 5. So 2008 to 2015 when it flattened out. So it's just a bear market for 8 years. Is that nearly 8 years? Went sideways for 4 years, just going sideways. Now it's looking to break. But yeah. So beginning. It's all about your beginnings, guys. Smart money concepts are what will make you good percentage returns, as long as you're not greedy. You're always going to have losses. Losses are a thing, and this is why we manage them. Because I'll just put Bitcoin up, because I've done some stuff on Bitcoin today. It's been quite nice. Bitcoin 5 minute. Right. So again, smart money concepts, like we say, we've had the come down, the down, then the break. That's broke the previous market. Okay. So there's an open candle down here, and I watched it go sideways and actually break the market. So it swept the inducement and then broke the market. And then I saw this. This is one of our you might, I don't want to go down. I'm trying to stay out the 1 minute. Okay, so we look for equal highs and equal lows. When that forms, we know the banks are playing. Now it's just what happens after. Now it worked out to a T, this one. So what they do, they sweep the highs, take everybody out, sweep the lows, and there was an unmitigated banker's candle there. So they've come down, closed within that candle, took the orders, and blasted off 15%. We're in the 5 minute now, guys. So this is how powerful you know, from it happening to it selling me out was 50 minutes. And on the right size account, you know, on any size account, 15% is brilliant. In 50 minutes, banks give you, let's go back to the banks. The banks give you 0.01 every 365 days. And I've just produced 15.3% in 50 minutes because of patterns that the banks leave behind. You know, what should have got, well, what would have got took there was these highs. You know, that's extreme profit. You wouldn't be looking to take up there. You'd be looking to take these equal highs out here, which still 7% return on your money. But then as we're following it, once that has broke, you've got another area of interest. So there's another banker's candle been opened up. And lo and behold, they came back, paced it, took off again, give you the previous highs, 3%. So you've had 10% of previous highs off just mitigating candles after a signature pattern, break, mitigation, 3%. Now I'm actually looking for him to come and take these equals here and mitigate these candles here. You know, and if that goes to its previous high, once it does that, that's 10%. So there's 20% in, tag me in at 20 past 12 this afternoon. And whenever, say, that finishes there, you know, it's been 10 hours and I've made 20%. You know, and I aim for 20% a month. So 20% in 10 hours, that's my month done. Just from finding an accumulation at a certain time, because that falls within London hours. You know, smarter, not harder, guys. So stop share. Yeah, just it's mainly just to get your eyes looking at what we look for. You know, once you've, well, obviously, if you're in the Discord, then you're going to have access to all the bankers' candles, the breaks of structure. There's going to be videos coming for each one over the next couple of days, so you can be skipping through the videos and getting your knowledge prepped. You know, so hope this helps everyone. Thank you all for being here. You know, you're making it possible for me to carry on and do this as a full-time career. So thank you, and keep shining, guys. It will happen. I promise you. You know, I have people in here that a couple of months in that are already seeing success. So keep shining, guys.